All right, looks like we already have 40 people joining, which, given it's 7:30 a.m. on a Monday morning in the East Coast, I would say is a pretty good start. So I guess we can get going. So just for background, my name is George Calle. I'm a research director at The Block. I focus on our professional services team. So that's as part of our research team, we do kind of like general purpose consulting, kind of working with our research members to kind of field any questions or go deeper into particular topics that is relevant to their investment or business decisions. And so today we're just talking a little bit about the crypto options market. So we've brought on a group of experts from both kind of the exchange side, but also the trading side. But just to give you guys the best context into kind of the expertise we have on this call, want each panelist to quickly introduce themselves. Will gave us the idea of starting in alphabetical order. So we'll kick off with Justin and go from there.
Hi, so I'm Justin Buitendam. I'm the Global Head of Institutional Sales for Bit. So Bit is a cryptocurrencies exchange that was launched in 2020. Primarily, we are an options-based exchange covering both USD margin and also coin margin options. We also have spot trading facilities and perps as well. So that's who me.
Yeah, I just go the next. My name is Markus Thielen. I work for Matrixport. Matrixport is a digital asset investment platform. We manage various products for high net worth individuals, as well as engage in prime services for hedge funds. And it's really like the full spectrum of also providing custody solutions for investors.
All right, cool. I'll go next. Hi, everyone. Patrick from Paradigm here. So before I joined the crypto derivatives market, I was an FX trader for the past 13 years, with my last role being the head of FX trading at UOB Bank here in Singapore. So a little bit about Paradigm. We are a non-custodial, free-to-use service that is integrating with exchange partners, such as today's host, Bit.com. Some of our other exchange partners includes like Deribit, Bybit, BitMEX, as well as CME. And our main value to the overall crypto ecosystem and its traders within it is to bring forth the OTC liquidity that is tighter and deeper than like what's available on the central limit order books, and bringing new product offerings such as futures spreads to our exchange partners. So in a way, we're effectively crypto's largest dark pool. We have more than 1,200 institutional clients, and we currently clear somewhere between 30 to 35% of global volumes, and 95% of the tickets larger than 25 BTC or 250.
Got it, thanks.
And hi, I'm Reid, the head of options at Wintermute. I've been professionally trading options for 6 years, initially at Maven, one of the largest option market making shops in TradFi, then in a quant PM role at a hedge fund, and I've been at Wintermute since joining a year and a half ago. Wintermute, if you don't know, is a leading liquidity and OTC provider. Our range of services covers market making, treasury and risk management, OTC, and derivatives trading. And in terms of options, we are very active in electronic options markets and one of the largest by volume on both Deribit and Paradigm, as well as being active in OTC options. And additionally, we also invest in projects and try to contribute to the ecosystem through our VC arm. Cool.
Got it. Thanks. I guess just to kick us off, I want to kind of set the stage with some of the like terms and metrics you guys all use for looking at the health of the options market, both from a perspective of like, how much liquidity and activity is there, and then also, how, what opportunities look like. And obviously options has like a whole litany of terminology that's used that's slightly unique from other kind of financial contracts. But what do you all kind of look for, I guess, maybe starting on the exchange side, to really determine if there's a lot of activity at a given time?
Yeah, right. So obviously, we're looking at quoting volume, trading volume in each strike. We also look at the different sorts of spreads, in between the quoted volume that's going on. Most often, most times, looking at the quoted volume, we can obviously look at the differentials between and work on what sort of volatility is happening at each strike price. So that's from the exchange perspective.
And how about from like a trading perspective? Obviously options markets are a little more complex than other derivatives or spot in that, you have multiple different strike prices to operate on. How are you kind of thinking about that? And particularly like with the nuance of crypto where there's potentially like less liquidity and across these different strike prices.
So the metric we would absolutely look at most is, as Justin said, volumes. Those have been steadily increasing through time, although it seems like they probably have quite a bit of growth ahead of them still. I think so some other interesting metrics actually are coming from the paradigm side. So I definitely think it's of note that a reasonably high proportion of the volume comes through a block platform. It shows that there's a fairly sizable amount of institutional activity already in crypto options. And I think also actually, again, on the paradigm side, they have a very good stats page, which is quite informative. But it's interesting to see how many market makers there are that actually have fairly significant maker volume. So that's another good metric to kind of indicate the level of liquidity in the crypto options markets.
I think just stepping in. Oh, sorry, George.
Go ahead.
Just wanted to step in real quick and comment on this part a little bit. Like aside from the usual stuff that you probably would use for the Delta One side, like daily turnover, open interest, and the depth of book. I think one of the main things to look at is like what type of strikes and the expiries, like the strike and expiry concentration, as in like how are the volumes, are they being well distributed beyond the front week? Like is there a wide range of different Delta type of options being traded? As well as like, what type of strategies, as Will alluded to earlier, are people executing when they're executing these options? Is it like single leg, is it multi-leg, et cetera? It gives you a kind of a thought process behind why people are executing the trades, as well as the current liquidity conditions within the market.
That makes sense. I guess like we touched on a little bit that, options volumes are growing but definitely have like a lot of room ahead of them. I guess one thing that's always like caught me sort of curious in the crypto markets is just in traditional like equities. I think futures outtrade spot like in the 10s to 1, whereas it's almost like 1.5 to 2 to 1 in crypto futures. Curious if you guys like see the same thing in the options market, and like if so, why? And why like derivative sees like relatively less volumes in crypto markets than traditional markets.
Well, I mean, there are, if I can jump in here, I think there are like two main reasons. I mean, first, of course, everybody seems to trade a lot of, levered perp futures, that you don't really have in the equity market. And I think the other aspect is that you don't have a lot of real institutions in terms of the size as in the equity market. I mean, you have, of course, pension funds that generally need hedging towards kind of like the end of the summer and so on. I think that those natural players that you have in the traditional markets are not really yet in the crypto market. And I think, those two factors really, that leverage you can gain through other markets, not just through the options market, and plus that you have still a lack of, institutional players, I think, in the crypto market. That's really like the key drivers from my perspective.
If I could jump in real quick, I think I'm totally in agreement with Markus on the leverage front. Like as an example, on the major exchanges, like at least last year, you could go up to 100x leverage pretty easily on the futures and the perps. Whereas like that kind of takes away that innate demand or need that for options. That's something that's only options can achieve in the TradFi space. But like, nowadays with most major exchanges lowering their leverage to 10 or 20x, I think that there's another room for future growth here. Secondly, like there's also a steeper learning curve for the average retail trader to trade options, given this non-linear nature, and also like the daunting payout profile. Like if you're trading from the short side, like you could get blown up with infinite losses potentially. So it's one of those where like you have to kind of like know what you're doing per se. And like I think most people in the last few rounds within crypto, long only strats have yielded like really good returns, especially on leverage in the last few market cycles. So there hasn't really been that levered need for options yet, but I think that's dynamically changing. As Markus mentioned, like the larger TradFi institutions aren't like fully into crypto yet, but like I think moving forward, we are seeing more and more guys enter the space. And like it shows in our volumes, which is continuing to tick up even in this bear market, where we've printed like 5 out of our 6 highest months in terms of volumes at Paradigm.
I think also with the larger asset managers entering the space too, we're now moving, especially with BIT, we're starting to offer the USD margin contracts, right? So this is something where the larger asset managers actually don't have to hold the underlying on their books, but are able to participate in the space. So we see this as a way that, can definitely help the crypto options market grow and go forth. And also over the period of time, we've only really had 2 coins to trade, being BTC and ETH. So I think as the the offering continues to expand, that'll draw new players in, and of course the options market will grow on the back of that too. But a little bit there to what Patrick just mentioned is there's an educational process that needs to come for the retail investor as well. So we haven't really seen the retail investor traditionally in crypto has leaned more towards the high leveraged perps or into the spot market. And I think this is part of what we do as an exchange now, is help educate them in how to trade cryptos and how to trade crypto options efficiently, and so they can get the best out of it.
Got it. That's really helpful, and there are probably some more questions we can get to on kind of the general options like market in the abstract. But just given you've talked about some of the types of participants that are active in the market, I think it's worth shifting some of the conversation to like the market structure we kind of see in the options market. And I want to talk about both CeFi and DeFi. But first, just kind of centering in on the like centralized venue market. I'm kind of curious, like you mentioned, multiple people have mentioned the breakdown of like retail and institutional participants. Obviously options have a higher learning curve. So I'm kind of curious, like whether you guys think there is like really any retail activity going on. I guess as part of that question is like, what venues exist and kind of like offer access to like retail participants? Is that like active in jurisdictions like the US? Like who really like can like experiment or trade these products?
Well, look, from an exchange perspective, obviously, being an options exchange, it does lean a little bit more towards the institutional player. But within that, we have seen a lot of retail, participants coming in over the period of time. So, we're originally an Asia-based exchange, so there was a lot of retail investment coming through Asia. But again, it's the educational process for these traders, right? They, having the high leverage perps, there hasn't been the need for them to trade options the way that, and also the sophistication that is in options, the education wasn't there. So the institutions are definitely still leading the space from an exchange perspective. And I think you would see that definitely through the OTC market as well, obviously.
Well, and I think you have, of course, Deribit with like 87% market share, which is, of course, very high, and it's based in Panama. So it's not easily accessible, let's say, for US institutions. But I think at the same time, you have like the CME options increasing, quite a bit. I think they had a market share of just like 3% earlier in the year, and now the market share has climbed to like 9%. So I think that's like a sign, of course, for institutions based in the US that are accessing the market. And I think then the question is, how can retail investors really access those exchanges? And I think that's kind of that needs to be solved on the regulatory side. But again, I think it's really, perps offer or have, as Patrick said, up until recently offered all this high leverage, and maybe going forward there needs to be some different solution for retail investors. And I guess the other point I would make is really that traditional finance, it seems to be that more put option up until recently were more kind of in demand from the market, because it was used more for hedging some core long positions, versus crypto is, of course, more activity on the call position. So people looking more on the upside and are not really, I guess, too concerned with the downside. Maybe that has changed this year, but usually I think calls to the ratio to calls to puts trades like 3-to-1 basically. So
yeah, that's an interesting metric, and I guess with that kind of assume there's people are using it possibly for more like speculation rather than like pure hedging. That's really interesting. And I guess Patrick, one thing that I feel like the conversation keeps getting back to is the utilization of like OTC markets for options. So I was wondering if you could kind of pause to like quickly comment on some of the types of like I guess like value that can be derived from going through an OTC market, whether that's putting together like multiple legs of a strategy or what that looks like and how you work with clients on that front.
Sure, sounds good. So I guess like OTC trading could be broken down to two kinds. There is the exchange cleared stuff, which is essentially which is our forte. And like, I think the core thing that people are looking for here is to try to find real interest, and the takers are trying to find like the best price possible. So guys who want to move real size tend to be looking towards block liquidity because currently the on-screen liquidity across the board, across all the major exchanges, tends to be relatively thin. For example, like if you take a look at the market leader Deribit with like somewhere between 85 and 90% market share, they might only have a few BTC at the top of their order book at any moment in time. Whereas like, we have, very supportive partners such as William from Wintermute and our other market makers, and we are often able to price way more than that, sometimes within this screen. So we can get tighter and deeper liquidity, which then can clear on the order book. So you still have the same, you don't have the counterparty risk, but you're still directly clearing on the exchange, but you're able to access much better liquidity and, in terms of both tightness and depth. So that's one of the major reasons why people tend to trade OTC over us. For OTC trades that don't happen over us, one of the main reasons for that is like, they might be wanting to trade something that is currently not being listed on the exchanges. And a good example of this was like for altcoins. So there was a pretty big market for this especially like in the first half of this year and the second half of last year, but that's died down a little bit right now as we enter the end of this year. And one other major reason that people tend to do like pure OTC trades, as in like bilateral trades with like the big with the big OTC desks, like Genesis, your Cumberlands, or your QCPs, this tends to be because like one of the major factors also is like the expiry time that is on Deribit. So it's at 4 p.m. Sing or 4 a.m. New York. So if you're like somewhere as a North American-based customer, like let's say you're in Puerto Rico or in Cayman or the Bahamas, for example, you probably will lean towards like, okay, I don't really want to wake up at 4 a.m. to manage my deltas. It might make sense to trade with a major OTC desk instead to customize my expiry time. So that's like one of the major reasons why that happens.
Got it. That makes sense. And I guess, Justin, we got a question from the chat from Simran, who actually joined our last webinar as a panelist. And it's about, Patrick mentioned that some of the value of using like an OTC desk is you can move into kind of a longer tail of assets or altcoins. What Simran wants to know, like what you think would be needed for the development of a options market for altcoins, like on exchanges, not just like through OTC.
Yeah, definitely. This is something that Bit.com is looking at, quite in depthly. And this was, part of the reason that we've, migrating the exchange towards a USD settled products, right? It makes it a little bit easier for us then to be able to list altcoins quickly and effectively. There's still the main issue with altcoins is just the depth of liquidity that can come, so it's been getting the market makers to be able to price these efficiently and keep obviously streaming quotes coming to an exchange in that. So the altcoin space to start, as Patrick mentioned, the end of last year, start of this year was quite active. And, that was the rise of the DeFi option vaults that started to rise. And again, there was a lot of OTC altcoin trading going through. But, we really feel that we can drag this back to a centralized exchange and bring it back on exchange. And this is something that Bit is definitely progressing and looking to start to list more and more alt contracts as we go forth into the start of next year.
Awesome, thanks. And I guess since we talked about kind of the growth of DeFi, it'd be remiss to not talk about the options products and options markets that are kind of decentralized. I know Open, Hedgic. I think both started about 2-ish years ago, kind of maybe even a little longer in Open's case, and the start of the DeFi boom. Frankly, I feel like there's not as much activity on these venues, but I would love to hear if someone has like a disagreeing take. What's kind of stalled activity there? What's interesting about these products?
Yeah, I can probably jump in here. I think options are quite a difficult thing to get right in DeFi. There are lots of features that a liquid options market needs, like, for instance, portfolio margining, liquid Delta One product, that are really quite complex to do in a decentralized manner. We are seeing more and more crypto option protocols doing that successfully, and I think it will be. I think there could be substantial growth there, but it's definitely a challenging thing to do in DeFi, and in a way, options are the most naturally decentralized product. One interesting thing in this area is Squeeth. So Squeeth is essentially a perpetual future on the price of Ethereum squared, and what that means is that you get constant gamma without having to worry about strikes or expiries, and it essentially concentrates all the liquidity for a convex product into a single contract. That hasn't, there's been some growth there, hasn't really taken off yet, but that is, I'd say, a much more naturally DeFi volatility product. Yeah.
Will, just on that, one thing we saw happen, particularly like on decentralized perp exchanges, just like DEXs as well, around the Ethereum merge, there was just a lot of activity because there were a lot of strategies around, how to get, spot ETH and then hedge out elsewhere. Were you seeing kind of like similar activity in the options market? I didn't seem to hear like much about it. What was going on there at that time?
Yeah, there wasn't, there was a lot of vol bidding in the run up to the merge. It ended up being a bit of a non-event. The main sign in the options market that the merge was coming up was, I'd say, the very large roll between different option forwards around the merge itself. So that was quite a good indicator in terms of indicative pricing for where the ETH proof of work token might be trading. But yeah, we didn't see, other than trading in the forward spreads around the merge itself, we didn't really see any particular option strategies that people were rolling out.
Well, I mean, you also had the Ethereum Foundation just like a few weeks before the actual merge coming out and saying the merge will not lower gas fees, and I think that brought a lot of people kind of more on the disappointment side, and I think that they took off some of their their bullish structures, right? I think that's otherwise I think you would have probably seen a lot more livelier event around it.
Got it. And I guess maybe from like the Patrick, your side, like how do you think about like DeFi options protocols, as a way, like providing access to those for your clients or using them to like build strategies?
Sure. Awesome. Thanks. So basically, our participation in the DeFi market has been by the DeFi option vaults, where we are essentially helping both Ribbon as well as Friction conduct their auctions. We're also in talks with Nuts to finalize that partnership. But basically, essentially, what we're trying to do is democratize access to participating within the auctions. This allows for like an expanded list of counterparties to be able to bid, and this will then kind of create better pricing for participants at the vaults, which will then increase the amount of yield they generate from participating in these DeFi option vaults.
Got it. That makes a lot of sense. And I guess we talked a little bit about the merge, but I think it would be interesting to speak more broadly to kind of like other events of like high volatility in the crypto market. I know we just saw one. Do these events generally like see massive upticks in options volumes similar to what we see in like derivatives and spot markets? What do you guys usually look for when you kind of expect a high vol week?
I guess I could kind of kick this one off. So, given the recent events, I think like in general, like option volumes tend to they tend to pick up a little bit when downward volatility occurs, as people like look for protection, and like the put skew ratio moves in favor of puts. So like, if it goes very negative, volumes tend to taper off a bit, like, when the market is like truly in like down only mode, as market makers kind of get a little bit more defensive and are less willing to add on to additional risk. What we usually see after that is like, as realized vols start to decrease, as they are like right now, volumes then start to pick up again as players try to sell Vega by like, strangles or straddles. Something that's like commonly seen like after major macro events as well, such as like, CPI or FOMC, etc. I think something like that's pretty interesting about like crypto options versus like TradFi options is like, historically, like while implied volatility obviously goes up whenever spot moves a lot, like it really only truly blows up when the market is like in up only mode, which is kind of the reverse of TradFi, where it tends to like truly pump only in down only mode, like the GFC or like during COVID time. So that's kind of the pretty interesting part. Like, in fact, even if you look like right now at vols and stuff, right, they're obviously elevated from like, let's say 1 or 2 months ago, but they're not elevated if you look at it from a 1 or 2 year timeline or horizon, as there's like this massive downward trending movement in overall implied volatility. So I think that's kind of like something that's a little bit interesting that's happened in crypto space versus TradFi space.
Yeah, actually, also on that point, and I think also in crypto, the implied vols, they don't stay up very, very, very high for a long period of time. I mean, they tend to spike, but then they come back quickly. And I think that's because of some of the option vols that we have mentioned, some of the other strategies that are more overwriting strategies, harvesting really the implied volatility premium. And I think that's really the difference, that these are short-term events, but then they normalize relatively quickly. So I think that's also interesting.
Makes sense. And I guess while we're kind of on, still more of like the market structure topic, seeing that we have a question around just like, flows on these exchanges and OTC venues, whether it's, more one way, or if there's like enough cross-flow exchange to trade or kind of like manage risk a bit better. So curious if anyone like on the exchange side has a thought on that.
Oh, look, there's still definitely two-way flow. It's, as the guys mentioned there's definitely that spike in initial interest and initial, trading activity as these events happen. But, it's, as Patrick sort of alluded to, you sort of see that continue on more in a bullish market than we do in, in the present sort of environment, which, is completely different to what you do see in TradFi. Maybe Will's got some more insight on the strategies that would run on that way.
Yeah, I mean, I think from the trading perspective, one thing that's interesting about crypto is that even when vol pops, it in absolute terms, it's actually not such a vol shock as what you might see in TradFi, just because vols initially are typically already quite high. So vol might double in crypto, and that's a sort of high vol regime for crypto. But in TradFi, you can have S&P vol trading at 8, and then something large happens, and COVID happens, whatever, and all of a sudden vol can 5x or 10x. So from a sort of market structure perspective, actually, the vol of vol can be lower in crypto than I'd say it can be in TradFi option markets.
Makes sense. And I guess kind of with kind of this third and last part of the conversation, I want to talk a little bit about like how options are being used, and obviously like I don't want people to give up too much of their alpha, but I think the best way to kind of break this piece up is in thinking about who is using the options and for what purposes. So I guess Will, maybe starting with you a little bit, at Wintermute, like what parts of the business are thinking about options? Is it specifically like the options desk with its own P&L? How are you using that to kind of like hedge exposure across other parts of the firm? I guess what is kind of the like breadth of scope that options kind of play in internal discussions?
Yeah, so we're focused on market making. So that's really our core focus is providing two-way liquidity. We may do some sort of medium frequency signal-based trading on top of that, but typically we're quite self-contained, and our Delta One business doesn't generally overlap too much with the option side of the business on our side. I actually think probably some of the exchanges will have some of the other people on this talk will have a better idea of different use cases that different market participants have. From our side, it's really just a two-way based business.
Yeah, from the exchange perspective, obviously we've got multiple different sorts of clients that come onto an exchange. You've got obviously the market makers that provide that two-way liquidity for us. We've also got the structured product providers that obviously come onto the exchange and become big takers. And then there's the hedging component. So you've obviously got hedge funds or asset managers that are looking to hedge their crypto exposure, and also miners are obviously in their hedging as well. So you certainly get that broad spectrum of use cases for options. The structured product providers, we're continuing to see the rise of structured products again. It's a way that people can obviously, in a low yielding environment, the use of structured products is a way to generate, quite a bit of yield. So that's something that's, we look to get a lot of that flow come through the exchange, and primarily obviously from, Matrixport there where, Markus works.
Yeah, I was just about to say, Justin, we should talk, but our main option strategy is really to sell just a lot of upside and generate the yield, and then we have some small overriding capabilities in terms of judging how the market performs. But we have done our back test, and we are quite diligent in being like systematic overriders really, and that's our main strategy.
Since on our end, we're not exactly taking risk ourselves, I can kind of maybe talk a little bit about what we've been seeing in common, what's kind of most commonly traded, as well as what's been happening in the last 2 weeks or so. So historically, just off the top of my head, it's the highest volumes have been concentrated on the front end of the curve, somewhere between the 1 week to 1 month type of expiries and options, with somewhere between 15 to 35 delta, and those expiry parameters accounting for somewhere between 70 to 80% of all options trading currently in crypto. So currently in the last 2 weeks, before and after the major headlines that we've seen with all the turmoil, Paradigm volumes have overall been led by demand for downside protection, especially for the year-end expiry. So towards the end of the quarter, the DEC 30 expires across both BTC and ETH. We've seen people executing outright puts, put spreads, as well as put flies. And in particular, the most popular strikes have been kind of focused around the 1,000 to 1,100 area in ETH, as well as the 14K to 16K level in BTC.
Got it. And Patrick, while we're here, we had a question just on relative volatility trading, particularly between Bitcoin and ETH. What are you seeing there? What are you seeing now versus in the bull run?
Sorry, you mentioned relative value trading between BTC and ETH, right?
Well, more, I guess, I think the question was on relative volatility trading. So more momentum-based strategies, I guess that would mean.
Oh, okay, yeah, sure. But you're referring to people looking at ETH versus BTC versus ETH versus dollar and BTC versus dollar. Is that what you meant, George?
Correct. Yeah.
Okay, got it. Yeah. That's definitely something that we've seen an uptick in interest for as into the merge and post merge. Unsurprisingly, most of the interest has been in favor of ETH versus BTC, trying to use BTC as a macro hedge against their ETH position. I do think that kind of makes sense, but given that the currently with the vol spread continuously being somewhere between 20 and 40 handles above BTC, it's also kind of hard from a vol perspective to play it off. I think it probably makes more sense from a spot perspective to kind of put on this position, if that makes sense.
Yeah, but I think over the last kind of I guess 12, 18 months, there were 3-4 instances when basically BTC and ETH was the same, right? Or very, very similar. So you could have really just bought, upside in ETH and sold the upside in basically in BTC. I think these are they don't come often, but I think they come from time to time if you're willing to wait.
And to Markus's point, that was as recent as maybe August or September, right? So yeah, that was a good trade, yeah.
Yeah, just on the relative value side, although ETH vols, do trade 30 or 40 points above BTC vols, often, when looking at comparing that versus the realized vols, actually, it seems certainly recently as though ETH is actually structurally cheaper and on a relative value basis than BTC. And I think the reason for that is probably relates to much larger decentralized option vault flows on ETH. So there's a lot of selling there that comes in every week. And I think possibly there may also be more natural hedging flow on BTC. So typically, in terms of the relative value trades, that's the way around that we see it. So ETH being a better buy than BTC.
Got it. And Will, I guess, since we've come full circle, thinking about like some of the strategies you guys employ, or even if you're comfortable just speaking like high level to some of those would, I think, be helpful for a lot of the people on the call.
Yeah, so we're always looking at the relative value side of things, looking at realized implied. That those are probably the biggest areas that we look at. Some other interesting trades. Sometimes if BTC or ETH is trading right at the edge of a range that it's been trading in for a long time, there's a potential to pick up liquidation ticks. So that's another interesting area.
Cool. And I guess we also, I think it would be a good time to like start looking at some of these audience questions. So, one thing we talked about was on-chain options, and just I think the general sentiment being that, it's generally harder to have this infrastructure exist on-chain just because it's like there are a lot of benefits of centralization and kind of pooling liquidity. But curious if like there's any particular infrastructure that would kind of support the build out of DeFi options markets, or if this is something that the group thinks is probably just like not well suited for decentralized protocols.
Look, from a centralized exchange, it's we as an exchange ourselves, we have full unified margin and portfolio margining. And these are two tools which are quite difficult to build and get right. And this is something that would be very difficult to achieve in DeFi. So as part of we go through the future and DeFi becomes more prominent, I think you're going to see a little bit more of a hybrid approach where either there's collateral look-throughs to some of these DeFi exchanges, but there's going to be a mix because it's going to be very hard for these tools and rails to be built in DeFi in the short term anyway. And that's why the way that we're looking to do more and more alt options through a CeFi exchange with Bit, I think this will lend itself to a hybrid approach of trying to incorporate some of these DeFi option vaults within a centralized exchange as well.
Yeah, and Patrick, curious to hear your thoughts, because I know you guys have been somewhat active with Ribbon. So curious if you have like sort of a contrary view or just generally what you think.
I think there's a lot of opportunities for both the centralized as well as the DeFi option space to kind of scale, given the very different use cases for each. So DeFi, especially after the most recent scenarios of what has happened, I think has been kind of on people's mind in terms of like self custody, etc. So I don't think that's going to go away anytime soon. But to be honest, also like it's very hard to make something performance that is also DeFi. So there will always be a place for centralized, centralized exchanges and clubs, and I would foresee like in the near future that most of the volume still stays within that space as well. So I'm kind of in line with what Justin mentioned. Yeah. But by the way, I also have a quick shill on a trade idea. If you guys want to hear it. Sure. So like I mean like obviously not financial advice first of all, but given current market like pricing and like where we are in the overall news cycle, I think like we've seen a decrease in realized volatility despite like all the continued negative headlines that keep coming out, right? So I kind of feel like almost as if like I'm not saying the low is in or anything, but it does feel like the sell-off is kind of reaching some sort of exhaustive phase, right? And risk reversals are still super favoring puts. Right now it's around like 20 vol. It's like 20 vols more expensive to buy puts versus calls. So it kind of like leads me to think that like if you are still in the mindset of having like some sort of like long-ended like option exposure, where you want to like cheaply express a view and you think like maybe the market will cover by like June of next year, right? You could put on some like call spreads very easily via Paradigm, via our multi-leg pricer with no leg risk, something like a 22,000 or 30,000 in BTC for June, or like a 1,600, 2,100 call spread for June. So what that actually means is like, let's say like I buy the BTC call spread, right? So like I pay like roughly 6% for it right now. So that's like my maximum downside. I can lose 6%, right? But if BTC actually is at 30,000 at June, I can 7x my capital. So like that's pretty good risk reward to me in terms of like, oh, and June does seem sufficiently far away to think like maybe we can get to the pre-merge levels again, because that doesn't feel that far away too. It's like 2 months ago, 1 or 2 months ago, right? So and like for ETH, it's likewise. If ETH goes back to 2,100 by June, you can 7x your capital as well. So that's something interesting to think of, and it shows you the power of the leverage within trading options in the first place. It's like with such limited capital, you can actually like 7x your capital, for example, which is pretty impressive, I think.
That's really interesting. I guess like to kill two birds with one stone, to dive deeper, but also to answer something like that was asked, just around like understanding like pricing models for like I think the question was particularly around like Bitcoin and ETH, but that probably versus some of the lower liquidity stuff. How do you guys think about that? Like, do the pricing models change? Like, what becomes more front of mind in that like calculation?
Yeah, I think typically we see less richness in the vol surfaces in BTC and ETH than in many TradFi products. So it's relatively easy to fit BTC and ETH relative to something like S&P, where there's a huge amount of richness in the vol surface. Yeah, I think lots of people have various different ways of doing their vol models. We have our own proprietary one. Many people use a cubic spline model. Pretty much, most off-the-shelf vol models would not have too much trouble fitting BTC or ETH.
And quickly, Justin, I'm seeing someone just had a pretty like tactical question. Is Bit kind of the only exchange offering like USD margined options, or what are the other providers there?
Well, I can't speak for the other providers, but yes, Bit is definitely offering USD margin products. So, we presently have BTC and ETH out in USD. This is proving to be, as we said, we see that as, where the future sort of lies for the crypto options space. It, definitely helps in the fact that, you don't have to collateralize it with BTC or with ETH. And even more so when we're moving into the alt space, people are going to want to trade these alts. And if it's a negative, they've got a negative view on any of these alts, they actually don't have to collateralize it with their underlying, the underlying altcoin to be able to trade it. And I think that's what's going to make these, definitely these alt contracts and alt option contracts quite attractive to certain people, because obviously we always, all of us have differing views on where they're going to head and what they're going to do. And for it to be able to be settled in a USD format and not actually settled if it's going down where you're settled and you actually get more of the altcoin that you have a negative view on, I think this will be, definitely something that'll help push the space forward. So for us, it's a big part of our future at Bit, and the progression it will be coming in the coming months.
Makes sense. It kind of reminds me of the progression we saw in like futures markets with like BitMEX kind of having that first initial like BTC margin products, and then now that's, I would say, there's more like USD margin stuff there. I guess while we're kind of like on that line, thinking about like the different products people use to like do delta hedging, there's a question around like perpetual futures or using like trying to like line up futures with the same expiry. Maybe Patrick, like or or Will, like, what do you guys see there?
Sure, yeah, I can kick it off first. So I think like the usual choice is actually a choice by necessity, because the perp market tends to be much more liquid than the actual same expiry futures market is. So what we actually see, and like one of the reasons why we developed the future spread product at Paradigm in the first place, is we realized that most people, including some of our largest customers, were hedging most of their risk on the perps. So we decided to create like essentially basis books. So, you know, after you had traded the perp, you can then trade from the perp into the same expiry future using our future spread book. Because this is a basis book versus a directional book, then like, you know, market makers are more willing to show larger size, given that there is less delta risk when you're undertaking the trade, because it's more of like, you know, you're concerned of how the swap points will move versus like, you know, if Bitcoin suddenly jumps 5% or not. So I think that's like kind of the main reason why like people have tended to trade perps and then use Paradigm's future spread books to manage their risk into the correct dated expiries. So you don't have to worry about like, you know, rollover risk and everything when the options expire.
Got it. Thanks for that. And just a quick reminder to anyone in the audience, feel free to ask some questions. Right now, we're just going through some we see in the chat. There's one more just on what's an acceptable execution latency. So curious if anyone has a view on that.
Well, that would come from Will being the market maker.
Yeah, I mean, I think you know, one of the interesting things about the crypto options market at the moment relative to spot markets and D1 markets is that latency is actually relatively more important. I'm just thinking particularly about Deribit here than it is on most of the Delta One exchanges. The reason for that being that most of the Delta One exchanges are on AWS, and there's typically quite a lot of jitter, and you know, latency can be very variable there. So the exact kind of latency of your execution system is arguably somewhat less important, whereas Deribit is much more deterministic in terms of matching engine speeds, and you know, it's difficult to give an exact number to say like this is an acceptable level, but it's certainly, I think, more latency critical than some of the D1 side of things.
Got it. Thank you. And I'm going to play around with this live answer tool just to give the group visibility into the questions. Just guys, quickly, are you able to see the questions tab, or you know, would it be useful? Okay, so I'm going to start this. Anyone want to kind of take a stab on kind of flow from structured products here?
Well, as I said earlier, I mean, you know, we are quite active at Matrixport in structured products, and this is really, I guess, a safer way for investors to really gain exposure to the crypto market. So it can be capital guaranteed products, it can be like a systematic call overriding strategies, I think, which has done particularly well, of course, this year, and especially, you know, if you take out the underlying crypto risk, so it's just really, you know, a pure vol product. And I think, you know, going forward, you know, I would also argue that probably, you know, volatility tends to probably go down a bit more. I think we are like at, I guess, kind of like around 70-ish, you know, implied vol for BTC, and I think that probably might drop back to kind of like, you know, 40% implied vol, and I think that's just like some spread we want to take. So we have, you know, the strategies really implemented to really you know, take advantage of the structurally high volatility level that we see in crypto, and you know, the longer you know, it stays, the better for us. So.
Yeah, we definitely, you know, as mentioned earlier, that, you know, over the period of time, especially in a lower yielding environment, structured products are a way for, you know, many even retail and high net worth individuals to you know, enter the options space by buying these structured products, right? So it's a way of generating yield on, you know, the assets they already hold. And even more so, again, with bit.com, you know, being able to release the USD margin products, they'll be able to generate yield and not have to, you know, ultimately accept back, you know, taking on BTC or ETH or whatever structured products we you know, are able to launch, you know, take that back as an asset, right? So I definitely see that as a continual growth in crypto options, going forward.
Got it. And just to as we kind of wrap this up, curious to learn, where you think the options market could potentially go in the next 2 to 3 years. Maybe let's presume another bull cycle. What participants are you looking to see enter the market? What infrastructure are you expecting to see built out? Where, given it grew so much over the last cycle, where do you see it growing kind of over the next?
Well, from us, we're very positive, obviously, on the growth of the crypto option space. Especially in the design of the products, we're hoping to bring, some of the bigger asset managers into the space. As mentioned before, if we're able to get the products in the USD margin, they actually don't have to hold that underlying asset on their book. And it makes it even more attractive to be able to trade in these high vol products, and not actually have the underlying. So for us, we continue to see, obviously, the growth of the institutional market more and more so, your bigger asset managers coming. And, generally just in trading firms, as we continue to build out the tools that are needed and that are coming from traditional finance into what we have here in crypto, you're going to see more and more of the bigger trading firms, continue to enter the space. So they are definitely here, but we're going to see even further growth. And, even in this, down cycle we're in, you're seeing more and more of the bigger hedge funds continuing to allocate a huge amount of capital towards the crypto space. These sort of investors are quite sophisticated. So for them, to use options is something that they've done, over the course of growing their businesses before in traditional finance. So they'll definitely move that into what they do in crypto as well.
Awesome. That's really helpful context, and I think a good place to kind of end the conversation just on a forward-looking note. Justin, Markus, Patrick, and Will, really appreciate you guys sharing your knowledge with us. I certainly learned a lot, and glad we were also able to really dive deep into some of the audience questions. I think everyone found that really valuable. So appreciate you guys hopping on, and look forward to talking soon.
Yeah.
Thanks, George. Thanks, everyone.
Thank you for hosting, guys.
Of course. Bye.
Okay, bye.